So welcome to the call. My name is Roger Garth. It's my pleasure to be your host today. And today I'm going to be introducing you to the crypto trader who is sending us all of our signals, that is making such incredible results for us with our Crypto One package to start off with. Corey launched this package with Kuvera just on 12 months ago. And the results are mind-blowing, because if you'd got started with Kuvera 12 months ago and you'd invested just $1,000 and you'd followed every signal that this guy sends out, and we're not talking about hard work here, we're talking about 2, maybe 3 trades a month. So we're talking about a very, very small amount of work. But if you'd followed every single one of them with $1,000 or £1,000 or dollars invested this time last year, today you'd be sitting on 19,000. You sent out 26 trades, and to date, not a single one has lost. So let's just before I introduce you to Corey, let's tell you a little bit about the man himself. So as far as we're concerned, we all know him as Crypto Corey. He's got a degree in finance and a minor in accounting from Oklahoma State University. And he was a financial analyst for a year before he decided to move into network marketing. He's been in network marketing for just over 5 years now. And in fact, at one point in time, he built an organization. You've got to think about this. Only 5 years in the industry, built an organization of 2.8 million active network marketers worldwide. Now, for reasons that were beyond Corey's control, that company ended up going down. When that company went down, Corey then got involved in investing in Bitcoin. And you can see on the screen the figures. When Corey got started, Bitcoin was at $600. Today it's more like $6,000. Ethereum's at $10. Ripple was less than a penny. And totally he accumulated more than 750 Bitcoin in a period of less than 18 months. That at that time turned out to be worth more than $15 million from a $10,000 investment. And that's really what we're going to be talking about right now. He's been trading at the moment for about 2 years. And he's been with Kuvera, as I said earlier, since April of last year. So it's just a little bit. So Corey, this is the picture when you first started with crypto. This is what crypto looked like just over 2 years ago. Tell us what the markets were like then and how that's going to compare to today.
Yeah, absolutely. And Roger, appreciate you having me on, guys. And great time in the UK this past week, and excited to come back there very, very soon. And I know a lot of big things are happening right now in the crypto space. We're going to talk about that these next couple of slides. But when I got in, Bitcoin 700, it was really 600, Ethereum under $10. These were literally the price points when I remember just coming across CoinMarketCap.com, Ponics.com, and these numbers seem high, right? When you think about Bitcoin being $1, and that's when you start to realize that price is just relative, right? And so you never really know what the caption is going to be, because more money is just continuing to flow into this market. But the trade volume also, and I want to show you guys here, there's $154,000 being traded daily in Bitcoin now. You have billions of dollars being traded in that space. So it's come so far, and it really is good to kind of look at this next slide, Roger, to kind of show kind of where things have really gone. And so we have what's called the Wall Street cheat sheet, this market cycle that's really dictating the price action because of the emotions that we have whenever we buy one of these coins, or really any commodity or asset. And so I got in. Obviously, I was in that disbelief stage. My company was paying me in Bitcoin. I didn't really believe that it was the future yet, or any of these other coins, didn't even know about them yet. But then coming across Ripple, because a buddy told me about CoinMarketCap, and buying 1 million of these tokens at under a penny. Well, that first kind of 3 weeks going into this thing, it pumped up to 7 cents, and I made $100,000 in a single day. It really was some intense volatility. So after that, it pulled back and I went all in. And some of y'all know that story, some of y'all don't. But the main thing is that Ripple went up to 45 cents, 750 Bitcoin, only for it to then come down. And obviously I had taken profit, and it was a good take profit. But I've seen this Wall Street cheat sheet market cycle show itself time and time again across every single one of those coins.
This is the thing. It's important we show this to people as well, though, isn't it, Corey? Because all these emotions that we talk about on this screen, everybody who watches this is going to go through this as well, aren't they?
Absolutely.
They're going to come in, they're going to get excited, then they're going to get scared.
Yep. And it's actually happening right now. You know what I mean? Right now there's been, a month of pullback on the alternative coins, which is always a great buying opportunity. But, people don't ever really realize the gains or accept the gains if they don't understand this market cycle. A lot of people are just kind of riding the waves up and down. And it's not until you understand this that you really start to take profit and close trades, because you just know that there is going to be a pullback.
And this isn't something new. This isn't sort of Bitcoin specific. People recognize this when it came to trading equities, and it's just an emotional thing that investors go through, isn't it?
Absolutely. And it also comes down to liquidity. You know what I mean? Whenever a price of Bitcoin is 20,000, right? Remember, it became that price because one person bought it at that price, but they could have bought a fraction of the coin. Didn't mean there was millions of dollars coming in at that price point. And so if someone wants to sell $1 million of Bitcoin at 20,000, they can't liquidate at all at that price, right? They have to sell these order books, and that's how a price can kind of dump down, which can cause a sell-off from other people of the panic, the emotions, and create that fear, uncertainty, and doubt, which is called FUD and talked about quite a bit. And that's just going to keep selling something down until it finds that support, which is right back down here.
That's kind of what happened last year, isn't it? Last year there was a panic and people got freaked out about it, price tumbled, and now it's climbing back up again.
Yep. And so if you look at Bitcoin's price, today it's up about 75% over the last 3 months. And so
we're going to look at that right now, because these are the new slides that you gave me. Now, these slides already are a little bit out of date, because you gave me these when you were here in the UK. And the fact that they're a little bit out of date tells you how quickly it's moving, doesn't it? You gave me these when you were in the UK 10 days ago.
Yep,
and we had Bitcoin then at $5,500. Now it's
5,900 about.
Yeah.
It's approaching 6,000. Yeah.
It's like 10% growth in a week. And Ethereum doing the same kind of thing.
Yeah, I think Ethereum's like around 180 right now or something like that. A lot of good news coming out on Ethereum. And so it just, you start thinking about what happens in the normal markets, right? 15, 20% for the year on these different hedge fund and mutual funds. I know it can be a little bit different out there in the UK, but I don't think anyone would be upset with an extra 38% in a month or 75% over 3 months, on their money.
Absolutely not. Absolutely not.
Okay. So I was going to say that just really goes to show too that this new market cycle, right? We talked about disbelief to euphoria, Bitcoin. When I got in, 600, 20,000, back down to about 3,000, 3,500, and now it's on the way back up. And these other coins are on their way back up even further. I guess one thing I'll touch on here is, basic attention token, where it's up 100% on the month versus, you had Bitcoin that was up about 30% on the month. That's how you make Bitcoin, right? When one coin outperforms another coin in the same given time period, it's an opportunity to make 70% Bitcoin on a coin like basic attention token.
And people can buy that right now. They can buy that at 40 cents.
Yep. And so what's one thing to keep in mind, guys, is that you don't really ever want to buy a coin necessarily that's up 100% on the month like that, right? This goes to show where one coin can go and where another one will follow kind of suit. And so it's important to buy the red, right? When things are selling off, when things look ugly, you want to buy that fear, because there's always going to be reaction to that sell-off. And so this is why a coin, goes up 100% in a month, is because people start to chase it, right? We call it the fear of missing out, that FOMO. You have to go against what your body's kind of telling you, right? When you want to buy something because it's up, you should hold off and really try to buy it when everyone's saying don't touch it anymore. Kind of like when Bitcoin was 3,000, right? Everyone was saying it was dead, don't touch it. Well, it would have been a great time to buy it, right?
Absolutely. So this other coin that you got here, because you said about basic attention token, you've got Augur as well. What's the deal with that?
Yes, these are just new coins that have been added to Coinbase. When I first came on to Coinbase, there was only Bitcoin and Ethereum being traded. Ethereum was around $7. Bitcoin was under $6. Then they added Ethereum Classic, they had XRP Ripple, Litecoin, Bitcoin Cash, Basic Attention Token, Augur. So what the Coinbase exchange is doing is they're bringing in new money by having pairs that are against the dollar, the British pound, not just against Bitcoin. You used to only be able to buy Attention Token on like a Binance with your Bitcoin, which means you had to buy Bitcoin first to then buy the token, right? Well, now, since Coinbase has listed the USD pair, so I'll wait for this car to go by real quick.
Okay.
So now that Coinbase has listed this USD pair, now someone can link their bank account to Coinbase and go straight in and buy that coin versus having to buy BTC. And so when you start to make it easier for people to buy something, what happens? You have more money come into it and more people do it, right? And so that brings market cap and everybody. I just want you to understand that these coins, their price points are off a finite amount of coins. At least 99% of these coins, there's a certain amount of coins. Versus when you start talking about the US dollar, the British pound, and how our governments can continue to print out money and inflate these dollars, right? Inflation is a really bad thing. If you're not making, a few percent a year, you might not even be keeping up with inflation, which means you're actually losing money by having it sit somewhere versus putting it to work in a type of market like this where there's more volatility and more gains that can be made. And so I guess the point I just want you all to really see is the amount of gains that have been happening over the last month or two. And that's that clear confirmation, again, that this bull run has started and the bear run is over.
Okay. So what was this with I saw these slides and I didn't understand these slides. So talk me through them. So we've got Steam and...
Yeah, so those are actually the same screenshot. I think.
Yeah, it is. You sent it twice, didn't you? Yeah, it's the same one.
So this is just Steam against the dollar. And so the main thing that to recognize here is how a coin can look one way against Bitcoin and another against the dollar, right? Because they're playing them at they're different pairs. Remember, so when you talk about a pair, let's bring this back to elementary, kind of on finance. You want the second pair of the coin or currency to do worse than the first one, right? If we're buying Steam against Bitcoin, it's because we believe Steam's going to do better than Bitcoin. If we're buying Bitcoin versus the dollar, it's because we believe Bitcoin's going to do better than the dollar. And that's how we're making more of the other pair. But, Steam, again, you can see a very, very clear Wall Street cheat sheet where this thing came out of nowhere and had about 10,000% gain against Bitcoin. It was even more against the dollar, and how it came all the way back down, back to that disbelief stage. And so we know from that Wall Street cheat sheet that when a coin goes from disbelief to euphoria back to disbelief, it starts over and has another market cycle, and most of the time goes higher than before. We call the all-time high, the old all-time high versus making a new all-time high.
Okay. So that makes No, that makes perfect sense. I'm trying to clear calls as well because I've got people chasing me. So yeah, no, it makes perfect sense. And again, it's like you said, you can see the same things repeating with that cycle going through time and time again. So I think the one thing that I really, when it comes to these cycles, the one thing I'd like people to understand is that these cycles are completely predictable, aren't they?
Yeah, it's a funny thing. Again, when I was getting my finance degree, they always used to say the past doesn't reflect the future on these different price points of different commodities and assets. And, I've kind of been able to, I guess, contradict that theory with the way that I've traded. And it really is amazing how these different coins and price points, they have so much resistance and support at different price points. And then it shows that same thing happen 6 months, a year later. And so that's what's giving me confidence to be able to really go back in the history of these coins and be able to make predictions and an analysis off of those data points.
And when it comes to making these predictions, this isn't all sort of crystal ball stuff, isn't it? Because you published this slide when we're talking about the Fibonacci retracement, and it always makes me smile that people are going back to workings of a 12th century Italian mathematician, but he has some rules that you can apply to modern day life and modern day trading that are tried, tested, proven, and they've stood the test of time, haven't they?
Yeah, absolutely. And so these percentages down here, it's pretty amazing. how they show themselves time and time again, you know, and again, 50% Fibonacci retracement just pretty much means that the coin pulled back 50%, right? It went, you know, from 0 to 100 back down to 50, right? Is a good analogy for that. And so, you know, for a lot of people, something going down from 100 to 50 would really kind of freak them out, right? And they think that everything's over and that they're losing all their money, when really it's kind of normal for it to have that kind of pullback retracement and even go further than that, you know, 61.8, 786. I mean, when coins get as impulsive as they do, it's important that everyone knows that things cannot just go straight up and up and up to the moon forever. They do need to cool off. They do need to kind of find that foundation and that stability kind of price point. And I guess the best thing I would really say about Fibonacci is it helps it get to the real traditional value. You know, a lot of the time when it gets really impulsive, they get value.
The thing that I really like people watching this maybe for the first time to understand is that Covera has two products in the crypto space. We've got Crypto One and we've got Crypto Coach, which is essentially your product. Now, when it comes to Crypto One, you're doing all the analysis for them. So really, the stuff that you've talked about, as technically interesting as we find it, a lot of people are going to find this difficult and scary as well. But they don't need to know that because you're the guy that's doing all of that for us.
Yeah, absolutely. I mean, I just want, you know, kind of I guess the point of this PowerPoint is to let people know that there is a method to the madness, right? You know, it's a crazy market to be in, you know what I mean? And everyone talks about it and everyone wants to kind of make this money and you know, be able to turn $10,000 into $1 million, different kind of things. But it's just not as easy as it sounds. And if you don't understand these different kind of things, you will get shaken out. You will come in and you will sell it at a loss, and you probably won't look at it again until it's back up to where you were in profit, you know. And
that's really the point that I was trying to make, because the fact is, we've all heard of people that have got into crypto, particularly these last 18 months, because people got into crypto and they bought as the market started to fall, and they blew fortunes. They didn't know what they were doing. But even when the market was falling and when everyone was saying crypto's a failure, it's going to lose, we made 1,900% last year capitalizing on that market because you were applying these rules and you were telling us which trades to make.
Yeah, and I guess the best, you know, thing to really realize there is that there's times where you can make money in every part. Sorry, got a copper, as y'all think y'all say out there, right? But you know, there's times to be making money on both sides of the market. You know, the bulls make money, the bears make money, the pigs get slaughtered is a good quote to kind of take in mind there. And you know, just you have to know what side is on it. You know, you have to know that okay, this bear run has started, things are going to pull back, and there's a certain type of way to play a bear run market. The same way there's a certain type of way to play a bull run. And, you know, the great thing about, you know, my trading style is it really is very adaptable to both sides of that coin. And, you know, with my experience of not only trading the last, you know, over 2 years and, you know, having, you know, 5-6 years of financial market experience, I'm very, very good at spotting those trends and spotting that reversal and that momentum shift.
Okay, and that really leads us into that next slide, because the next slide is talking about buy versus sell orders. And in real world, what we're saying is there is a time to buy and there is a time to sell. And this is what we're going to talk about now.
Absolutely. And so you want to sell into strength, right? You want to sell your profit when people are wanting to buy, because if you wait too long and you get greedy and the buyers start to step back, the bulls start to step back, there's no buy orders for you to sell your coin into to realize that profit. And so another good example that I would like to use is for my real example right here. So, you know, I got 4.8 million Digibyte on this Fibonacci account. And if you look at the price under that, it says 375 Satoshis. So you have the US dollar, you have the British pound. This Satoshis is what we call the Bitcoin price. So if you go right down directly to those buy orders, you'll see there's somebody who wants to buy 218 Digibyte at 374 Satoshis. Okay, so now if I want to sell my DigiBuy, I want to sell all of it, I can only sell 218 at this first price point, which obviously is not going to fulfill my 4.8 million DigiBuy order, right? So then the next order is 2,000, right? Below that, you have 103,000. So as these orders start to add up, you know, hopefully they start to add up to my 4.8 million DigiBuy, right? Because I'm trying to sell it all back into Bitcoin. Well, if you look at this right column, and I really want you all to understand how to look at an exchange order books and understand what's going on with all this data. It's kind of what I'm doing this as well. But if you look in that right column, it says the sum of Bitcoin. So that means all of these orders now, the sum of all those orders is about 7.3 Bitcoin, which means, again, if I had 7.3 Bitcoin worth of DigiBuy, which this is, you know, 30, 40 Bitcoin, I can just go down and I can sell into all of those orders. Remember, these are all different people who've put out these buy orders, and then now by me selling into all these, I've just fulfilled all these people's buy orders, right? Well, whenever I sell it down at like 3.0, whatever that last price is, it becomes that price. Again, that's how Bitcoin became 20,000. Let's say it was at 15,000. You know, all these orders, right? Someone came in with $50 billion. They bought all those orders up, and boom, the price became Bitcoin. Sorry, Bitcoin became $20,000. Well, if there wasn't a whole bunch of orders coming in at that price, it won't sustain that price. And so this could be a little bit more advanced, but you have to understand it, even the basics, to really be able to understand how to liquidate in and out of a coin. And so, again, with that being said, if I came in here and I sold in all those orders, it'd make a big red candlestick like this big on the chart. And so the thing that's important to know there is that there wasn't a whole bunch of people selling DigiBuy to make that big red candlestick happen. It was one person, a market maker, a whale. I'm kind of a market maker, a whale, when it comes to small coins because of how heavy I go into them. But that same analogy works with someone who has 10,000 Bitcoin and wants to sell his Bitcoin back into British pound to $1. And so if you can understand all of that, then you know that just because Bitcoin went from 20,000 back down to 3,500, it was not because everyone was selling their coin, everyone was panic selling their coin. There's actually a lot of people who were holding their coin. Actually, if you look at the top, like 15, 20 wallet addresses of Bitcoin that have all the main Bitcoin, none of them even sold any of their coin. So it's really that volatility, that price emotion that, again, makes things go up and down. It doesn't really mean there's a whole bunch of people panic selling and selling out of a coin.
And again, that my big key that I really want people to understand is that for someone who's just joined Kuvera today and is looking at this and is excited about the possibility of making profit, and they've seen the headline numbers that said, last 12 months, we've made 1,900% profit following your trades. They don't need to do this. All they've got to do is take the information that you give them and just literally just follow the instructions as they come through. And it's just buy at this price and sell at that.
Absolutely. And so that's a great thing about knowing the orders too, is, you know, if I say to buy in this buy zone, you can just go and put a buy order at that price, and then you'll see how it gets filled by people selling into it.
Yeah. Okay. All right. So you've produced this slide talking about trading strategies, and you've got two distinctly different strategies. You've got one for a sort of a safer trader and one for an aggressive trader. And I love the fact that your definition of it definitely has me categorized as the safer one because I'm an old man. So thanks for that, Corey.
Yes, so I
You do your stuff. It's okay. You do your stuff. Explain your slide to us.
Yeah, absolutely. Well, again, just kind of going to that, you know, I know risks, I think, more than a lot of people, you know, given that the whole finance degree, you know, whenever you do other kind of degrees, you don't really learn about risk management and these different kind of things. And so I always learned, you know, kind of growing up, if you will, that as you got older, you should take less risks, right? When you're young, you don't have obligations, you don't have kids, you don't have a family. It's just really all that you got to worry about is feeding your mouth. You know, you can take a lot of risks because, you know, you can't do that to your kid. You can't just not feed your kid, right? But you yourself can maybe just have a protein shake instead of having a nice steak meal, right? You can kind of rough it sometimes, if you will. And the other side of too is that you have more time to make it back, right? You know, we all have this idea of, at least, you know, here in America, of trying to retire around 55, 60, 65, right? My dad's 62. He's still not retired. My mom's 60. She's still not retired. But I know that they're wanting to, right? Well, if my dad were to make a bad investment move out of his retirement fund, right, you know, he's only got a couple years, you know, before he's trying to be done to make that money back. And so, you know, maybe you don't want to do something crazy with that big nest egg, right? Versus, again, someone who is not really planning on retiring for 30, 40 years, you know, if they make a bad move, they make a mistake, there's plenty of time to recoup that. So that is to help you guys understand where you're at kind of between the conservative trader and the aggressive trader. The aggressive trader is kind of off my trading style. And this, you know, more risk adverse is how I traded my dad's money. And so I did help my dad go from about 10 grand to 50 grand. And, you know, they didn't really get in, him and my brother, as fast as I did. Probably like around 8,000 Bitcoin is when they finally decided to put some money in. But, you know, again, I traded my dad's money differently than mine. It's kind of the point there. And so if you look at this chart, I got different tiers. Depending on the tier is how much money you have coming into this, and it is in US dollars. And so if you look at that first tier, right, if you're conservative, you might have $500. You might put $250 in one trade and put $250 in the other trade. See, under that, you have 0% in Bitcoin and Ethereum. That's because if you have Bitcoin, you want to leverage that Bitcoin to make more Bitcoin. So if you have Bitcoin and Bitcoin, it can't make any more Bitcoin. It can only make more British pounds or dollars. So you go down to the aggressive trader, you see that 500 is put all in one coin. That goes back to my XRP Ripple, right? I went all in on Ripple, and it was a good thing I did because of that capitalization that I had on that. I was able to swing it over to other coins that had not broken out yet. Well, as you start to move from left to right, you start to increase your dollar amount. And so, you know, as your account's now at 10 grand, right, you can start taking more trades. And so you can be what's called too diversified, right? If you have only $500 and you got spread out in 5 or 10 coins, right, if one of those coins really breaks out and gets impulsive, you're not really making that much money, right? You might only make 20, 50 bucks in that trade versus had you gone full in on it, you would have made $500 in the trade. And so that's the concept there. And so let's just kind of revert now to the other end of the spectrum, kind of tie this whole thing together. So let's say you have $1 million, right? You see there's still only 10 trades, right? You never want to be in 15, 20, 30 trades, right? I've seen some portfolios like that. They're way too diversified. They can't keep up with that many trades. They don't know if they're in profit on one or they don't even know when they bought it, right? So it's better to be, you know, diversified in a sense, right? You don't have all your eggs in one basket, but if you have $1 million and it's across 10 coins, still 100 grand each coin, right? It's still, you know, quite a good allocation for each trade. But one thing that I want you all to see is these last two lines, percentage of portfolio left in Bitcoin, right? So myself, I have 250 Bitcoin in cold storage that I refuse to touch. People have asked me to do different things. They've asked me to invest in different things. I could be buying the dip right now. I refuse to touch this because that's that rainy day Bitcoin. That's that Bitcoin going to 50, 100 grand, right? That's kind of the concept. I'm not going to touch this Bitcoin until it hits these certain fiat dollar prices, right? But that doesn't mean that I'm not still trading altcoins and want to leverage some Bitcoin that I have. It's just about eventually, as you start to make a lot of Bitcoin, eventually you want to take some off. And so that bottom line is Ethereum, because Ethereum and Bitcoin have two different blockchains. They're completely not related, and there's some people who think that Ethereum is going to be the future of blockchain technology, whatever, using smart contracts versus Bitcoin. So if that's you, maybe you want to hedge yourself on that and leave some in Bitcoin and some in Ethereum, and again, trade the rest for other altcoins. And so the big difference here too, from the top to bottom, is you're using only 15% of your allocation of that of the $1 million. It'd be 150 million you're trading in altcoins, versus down at the bottom, you're still trading with like 400,000 of the million. So that's more risk, right? You're leveraging and risking more Bitcoin to make more Bitcoin, so increase your Bitcoin position. So I think that's a pretty good job at, you know, analyzing this chart. And so you can kind of figure out which tier you're in, and hopefully we're all moving from the left side to the right side and start to, you know, change our allocation.
Absolutely. Okay, so all of that takes us into talking about the different exchanges that we have. Now, you've mentioned a couple of times these are the three exchanges that you mostly trade.
Yep.
Now, we have to say straight up front that because of the source of company that Covera is, Covera do not recommend any particular exchange, and which exchange any individual chooses to use is completely their choice. But you've got a real good reason for making sure that you stick with the major players.
Absolutely. And so the great thing about these three exchanges is that if you have an account on all three, you can pretty much take you can take every trade that I put out the crypto one. I've seen in my time, exchange like Cryptopia go down, which, was a pretty popular one for the lower alternate coins, a lot of penny stock coins, if you will. And it's not up right now. They got hacked and they've been down for a long time, and people who had their coin on there have not gotten it back. Before my time, there was an exchange called Mt. Gox, and it was a really big deal. It went down, and people lost a lot of Bitcoin. And keep in mind that the Bitcoin price was way cheaper back then, so people were losing hundreds and thousands of Bitcoin, which, at 2018 prices, they all had millions of dollars, right? So people lost millions of dollars by an exchange going down. And so, Binance is the largest exchange, lots of trade volume. I think one of my buddies said that they have over like $1 million trading like every 3 or 4 seconds, something like that. It's a lot of money going in and out of those coins. And, remember, they make trade fees on that, so they're doing well. And you have Bittrex and Poloniex, which are both U.S. exchanges. And here in the USA, we have the SEC, the Securities Exchange Commission. We have the FBI. We got all sorts of regulators that are cracking down on people, and so that keeps them a little bit more on their toes, right? And they've also have done what they're supposed to with the IRS, Internal Revenue Services, for tax stuff. They've complied there, and so if Bittrex or Poloniex, we're going to go down, they would have gone down kind of a long time ago for not complying with the U.S. regulation stuff. So with that being said, these three exchanges are all pretty strong. I do have a lot of coin on each of them, and I feel pretty good about them. Does not mean that one can't go down tomorrow, right? And so that kind of leads into the cold storage, right?
Yeah.
And first before that, right, we have Google Authentication. So to stop yourself from being hacked, if someone has your username and password, you can download an app called Google Authentication, and pretty much it's these 6 digits that change, I think, every 15 seconds. And so pretty much if you're logging into Poloniex, you put your username and password, it then asks for these 6 digits, you go to your app and you copy it over. And so if someone hacks your email account, finds out your password and stuff, they cannot log into your account without your phone, pretty much, these 6 digits. So really important that as soon as you make an account on any exchange, that this is the next step that you do before moving any coin to the exchange.
Okay, and I've heard people say that they've had difficulties with this, but it's not a complicated process, that is it?
No, so pretty much, I guess the run through on that is you kind of go to your settings area. You see security. It usually says either Google Authenticator or 2FA Authenticator. You click on that, and it's going to bring up a QR code that you would see in any type of Bitcoin transaction, right? You go to your app. If you see on this app right here, there's a plus sign in the top right corner. You click on the plus sign, you take a picture of the QR code, and then it's going to immediately recognize that account on here, and then it's going to ask you to put in the 6 digits. So if anyone has any problems, with this, definitely reach out to your upline. If your upline can't help you out, come help me down on Facebook, and I'll help walk you through it.
Okay. So you were talking about cold storage. So tell us about cold storage. Whoops, I jumped on a page. Let's go back one page to talk about cold storage itself.
Yeah, so cold storage is a way to protect your coin from the exchanges, right? So you're not only protecting your money from other people around you, but you're also protecting your money from the exchanges, right? This is the wild, wild west of currency. I want everyone to know that, and it's not for the faint of heart, right? And so these are times, though, where there's big money to be made, right? If you wait for everything to be super safe and all this regulation in place, well, that's when mass adoption happens, and you've already kind of missed the boat, right? So you want to get into something before all the red tape and before all the barriers are there, right? Because that's how you really get that wealth transfer. And so on a coin, you have what's called the private keys, right? So you have a Bitcoin, and if you hold the private keys to that Bitcoin, well, you actually have like the identity of that Bitcoin. You can, have, it's almost like having a receipt that you bought the Bitcoin, right? And if someone over on the exchange has your Bitcoin, well, you bought your Bitcoin, but then you kind of gave them your receipt, so they kind of have it in a sense, right? It's the best kind of analogy that I could use right there. And so I talk about that 250 Bitcoin that I have in cold storage, right? So by me taking off the 250 from Poloniex, Bittrex, Binance, and moving it to this cold storage, well, now I have like kind of 250 Bitcoin in my hand, right? And so if these exchanges go down tomorrow, I lose whatever I have, my altcoins on exchange, but I still have my 250 Bitcoin, right? And if that still goes up to the prices that we think it's going to go to, it's still going to be a really nice nest egg. And so that's kind of why I don't want to move over, because, again, I don't want to put it at risk. And so if you look in this top right corner, you'll see there's like Bitcoin, there's Ethereum, Litecoin. So these cold storages can hold more than just Bitcoin. I think a lot of them hold like over 100 coins now. They're really doing a good job at continuing to add new coins. And so you can move over, 50 Bitcoin from exchange and 1,000 NEO and all these different coins to the cold storage, to where if the exchange goes down tomorrow, you still have that coin. The only problem with having coin in cold storage is that if you want to sell it, I don't ever recommend anyone carry their cold storage around in their pocket, unless some people have like actually two, right? They'll keep one for like almost like a wallet that might have $1,000 on it, and they keep the big amount, at home. And so like for myself, if I'm in the UK traveling and one of my coins, goes to take profit, I want to sell it, well, I can't touch it if it's back home in cold storage. So what I kind of say is keep on the exchange only what's relatively tradable, only if you're waiting for something to go to take profit. Once you sell and take profit on that coin, move that Bitcoin back, to cold storage or into another coin kind of deal. But again, the main takeaway here is that your coin is only really yours if it's on cold storage. If it's on the exchange, it's kind of technically the exchange. It's kind of like having your money in the bank, right? If Barclays Bank or Bank of America were to go down, even though it's our money, right, it's going to be really hard to get the money back, regardless of FDIC insurance and all that kind of stuff. So,
yeah, cool. Okay. And now we just got some screenshots of what it looks like when you're actually taking this stuff on and off. Yeah.
So, this is an S Nano Ledger. I'm a Nano Ledger guy. Trezor is great. I know people who have Trezor, but I've just gone the Nano route. So this is kind of what it looks like. You have a desktop right on your computer. It can show all different coins. This just shows I have 110 Bitcoin Cash. It was down, 33% on whatever the month may be, and the value was like $28,000. So you still get all the kind of analytics that you would on the exchange. At the bottom, you see the last operation, so you can see the transactions going through the same way you'd have on your deposit transaction history on the exchange. And to the right, screen is just kind of what it looks like. You put your device in through the USB to your computer. You put in a code to open it up, and then boom, you have access to all your coins. Really, really friendly, user-friendly, and pretty simple.
Okay, so let's go through to your take-home tips. A little list of tips, which I love some of these. And just trying to simplify things as much as you can for people when it comes to how they should be thinking in terms of trading. So let's get you started with that.
So the first one is buy the fear, sell the greed. Okay, remember, be fearful when others are greedy and be greedy when others are fearful. That was Warren Buffett who said that. And pretty much, you have to buy something when it's super ugly and red. If you look at all the coins right now in the last month, it's all down. It's super red. Great time to be buying, right? Just like it would have been a great time to sell in a month ago before it all came down. So, and then sell the greed. For 3 months, these coins were going up, and they're all up, 40, 80, 100% on that 3 month. And remember, things aren't just going to continue to go up, right? So there's now a pullback happening right now. So buy that fear and sell into those green candlesticks.
Okay.
Sell the news. So when I got into Ripple, it was under a penny. Whenever I got out around 45 cents, everyone said it was going to $1. Then it cut in half. Next time when Ripple went up, it went up to like $3 or so, $4. Everyone was saying it was going to $5. It didn't. It stopped, short of that. So Bitcoin, another good example. I got in at $600. Nobody was talking about it. As soon as it was at like 15,000, 14,000, it was like it was being talked about every single day. Oh, it's going to 40,000, 50,000, only to go to 20,000, get denied and come down. So whenever a coin is being talked about on the news, it is time to get out of that coin. The best example I can use is people do not get rich by watching the news. You have to be in something. You have to know something. You have to be able to spot a trend yourself or almost have like inside information to be able to make money on something, right, before the masses do. And so pretty much anyone who bought Bitcoin because they saw it on the news, regretted that decision and has been probably holding it at a loss ever since.
Okay. So it's your animal farm here.
Yeah.
Tell us about bulls, bears, pigs.
Yeah, so I know a lot of people might not really understand the bull market or the bear market. It's a really quick Google, but pretty much the bulls are the people who buy it and push it up. The bears are the ones that short the market. They're trying to sell it down, and they're making money by selling it down. Shorting is something that you could also Google. Works for other kind of options and stock stuff as well. And then you have pigs get slaughtered. So we all know what a pig is, right? Bacon, ham, right? They go to the slaughterhouse. And so, bulls are making money. The bears are making money. They're both happy with the market doing what it's doing. There were a lot of people that were upset when Bitcoin came down from 20,000 to 3,000, but there were a lot of people who made a lot of money on that downtrend. And so the pigs get slaughtered. The pigs are people who do not know what they're doing. And that's the great thing about this PowerPoint. That's the great thing about Crypto One. That's the great thing about Crypto Coach is I'm teaching you guys how to not be a pig, how to become a bull or bear, and be able to pull off every dollar you can off this market and not be the one that's kind of run around with his head like a chicken with his head cut off, losing money all over the place.
Absolutely. So
okay, don't get caught up with the FOMO. I talked about earlier that fear of missing out. That's what happened when Bitcoin went from 10,000 to 20,000. Remember, I got in at $600 at $8,000, $10,000. I thought it was super high. I sold like $40,000 worth because I was going to buy it back down on the dip, only for it to keep going, continued on. And it was because people were afraid of missing out on where it could have potentially gone. And so whenever that FOMO was happening, you really wished you were already in and you could sell into that euphoria. So, again, don't get caught up in that because if you do, you will make a late buy versus being in a position to be selling it and selling into that strength and taking profit. And then the FUD is the opposite of FOMO. Fear, uncertainty, and doubt. If someone would have bought Bitcoin at $20,000, they were probably holding it. Everyone was like, oh, it's probably going to go down. They recognized it. Yeah, it's going to go down. But then when it got down to 3,000, they're like, man, maybe this thing is done. Right? Maybe I'm never going to see my money back. Maybe this thing's going to go to zero. And they would have lost the full amount. A lot of people mortgaged their homes, second mortgage their homes, sold their cars. Really went all in on Bitcoin at a really high price. And had they understood those negative emotions, that Wall Street sheet, they would not have panicked sold at the bottom. And they would be really happy right now that things are going back up and it's back at almost $6,000, right? But for the people who let that fear get to them, they pretty much panicked, sold, and they sold their coin to me because I was buying it at 3,500, right? So those are my buy orders, right? And they sold it to me. And so, guys, this is that zero-sum game, right? For someone to win, someone has to lose, right? For us to buy these coins super cheap, someone has to sell them to us, right? For us to take profit when they're higher, somebody has to buy them from us. And so you have to know that as a trader. Again, they call it a zero-sum loss and or zero-sum win, whatever it is. Google it. It's a good finance term. But again, if you understand this, you just have to know that to be prepared for every run, bear run, bull run, bear look, outlook. You gotta get my thing. Let's go on.
Okay. So stop losses. Never take a stop loss in crypto.
Yeah, so the main thing on here, everybody, is to understand the difference in percentages. When you're trading, Forex, and it's a little bit different with the pips. You're not owning the currency. You're kind of trading on margin, if you will. And so you can be what's called margin called. You can blow an account. You can start with 5,000 and literally go to zero. Well, with crypto, it's a little bit different, right? If you buy $5,000 worth of a coin, you still hold those coins, kind of like you hold stocks. So even if the price goes down, you don't have to realize the loss if you don't want to. And you can really, play the volatility a little bit easier. And so with stop losses, I know people normally like to do 15, 20%, right? Well, it's very easy for an alternative coin, especially to go down 15, 20% in a single day, only for the next 3 or 4 days a week to be way green and way back up. And so if you use a stop loss, a lot of times you'll just be stopped back into Bitcoin, pushed back into the traditional coin that you bought it with right before a coin goes up. So I do believe that stop losses are important and necessary in foreign exchange market, but when it comes to cryptocurrency, it's definitely a negative thing for trading.
Okay.
And we talked about this, only keep your coin on the exchange, what's readily tradable. Anything else should be on that device in cold storage where only and it's super safe.
Yeah. Okay. And in terms of targets and taking profit?
Yeah, so, again, I've been very, very good at recognizing this price history and these different support resistance levels. And, 95% of the time, coin will hit my take profit and then pull back and do that retracement. So I kind of say that coins take the elevators up and the stairs down for 3 months, right? Coins are really moving and grooving. In the last month, a lot of that growth has been pulled back and retraced. And so same kind of thing, we're going to buy this dip now and we're going to play that next wave up. But really important to get into sell into that strength when people are buying it and when the hype is there.
But the most important thing to get out of that is that if you send an alert out that says now's the time to sell, you really mean now's the time to sell. Otherwise, the price is going to turn and you're going to lose money.
Yeah, absolutely.
So when you get that alert, take some action on it.
Yeah, absolutely. And the whole point of this, everybody, is to continue to grow the coin. So if you can take profit and realize gains, well, when it comes back down and you buy back into it, you now have more coin than you did before, and constantly the accumulation of more coin.
That's great. Okay, so Google authentication we'd already talked about, and we'd already talked again about the exchanges that you move a coin to, because we predominantly are going to stay playing with safe, the cream when it comes to exchanges, rather than taking chances on smaller exchanges.
Yeah, so, absolutely. And the same thing goes with the coins, guys. I'm focused on coins that have a high, large market cap, and that we can feel confident buying the floor and the dip of it, because there's still hundreds of millions of dollars or $1 billion into it, and we know it's not going anywhere. Versus, again, there are some coins, that are 400, 500 on the market cap that maybe will never get their price points back, and maybe will be gone one day.
And we talked about this when you were over here in the UK, because we were talking about it's the idea behind choosing your right markets is knowing that there is someone to sell it to as well, because it's really just a question of supply and demand. That's what you're talking about.
Absolutely. And that's the other side of it. So I talk a lot about technical analysis trading, but there's also what's called the fundamental side, and that's how good a coin is. What is the coin doing? Is it a utility coin? Does it have a use case? Is it solving a problem in the world? Are they doing the things that they say that they're going to do on the roadmap? All those things also are really important. But regardless of how fundamentally strong a coin is, it's not just going to go straight up, right? There's still going to be the Elliott wave, all these different kind of things that play into it. And so, we want a fundamentally strong coin, because it makes it that much easier to do the technical analysis trading.
Okay. So we talked throughout this. We've mentioned 2 different products. We've mentioned Crypto One, which is the platform that we all come in at as Covera distributors. Most people coming on board with the All-In Pack, or what's now going to be the All-Pro Pack, we all get access to Crypto One, so we get access to your signal straight away. And Crypto One's a good stepping point to get started. But now you have Crypto Coach for people who are more serious about what they want to do with investing in crypto, and you're going to teach people a lot more stuff. But that's when they need to start to know the detailed stuff that we were talking about earlier.
Yeah, so I guess the best, why this came up is, again, the 1900% gain, right? There were a lot of people that started with a certain amount of money and then grew their money to a large amount on the crypto one. And now it's like, all right, Corey, what do I do next kind of deal, right? So I kind of realized that there was this big kind of disconnect and gap. A lot of questions were falling through to me. And it just really showed me that there was a need for more than, hey, buy here, sell here. This is why we're doing it. And so whenever someone knows why, they're more inclined to put more money in, right? So, again, crypto one is great for someone who's got a few hundred British pounds or maybe 1,000. But as you start to take that to 5,000, 10,000, British pounds, a lot can be done with that number, right? It's really easy. That's that American muscle. I don't know if you guys know about that. I'm joking. This is the kind of product for someone, who has 5,000, 10,000 British pounds, and they want to take that to 100 grand or $1 million. And I believe that the market that we're in right now is kind of the exact same part that I was in when I first came into Bitcoin being around 600. I mean, when you look at these different charts on these coins, the amount of percentage gain that they have going up, 800 to 10,000% against Bitcoin, not just against the dollar. And, those are the kind of moves that I made against Ripple and some other coins that kind of put me in a position to make the $15, $20 million that it was back then. And, today, everybody, I want you to know that I'm sitting on 33 million US dollars right now in cryptocurrency. And so I say that because when you think about the price point that we're going to get into here in a minute, you think about the kind of percentage gains, the kind of money that's going to be made on this market cycle. Remember, price is so relative, and it's actually, really, really cheap. And so I say all that because with this product, again, I'm doing a live market review every single week on Thursday. I've yet to miss a week since I started this thing at the end of November, January. So, 4 or 5 months strong of being, on top of that, regardless of where I've been in traveling. We do an onboarding call. It says 15 minutes. I really need to update these slides, so I'll get Roger some new slides. But that onboarding call usually takes about an hour. And so, on that, I'm helping them get their trading view set up and formatted with all the indicators that I trade off of, giving all the secret sauce away. There's not a single, indicator that I trade off of that I don't, let the student know, if you will. We talk about what kind of coins they're in right now, what kind of allocation they have, and it kind of game plan what we're going to do, right, going forward with that 5-10 grand and how we're going to get to 100,000 first step and how we're into 100 to $1 million. And so, I do have a couple students now who started with, a 5-figure investment and now are over 6 figures. And so, things are definitely going right on track on that. I mean, one guy started with like 10 grand and last time I looked at his account was like 150. So, like 150,000. So, those are really strong percentage gains. And this call is done via Zoom. Phone call is not really going to cut it. We really need to do a video call. And so Skype or Zoom is what we've been doing. And I do that onboarding call within 48 hours once someone joins Crypto Coach. So, that's kind of the gist of that first slide.
Okay. All right.
And then, so, on top of that, you can ask me questions 24/7. So I add people to a chat. There's this community chat where people ask questions, and I'm in there. And the great thing is, the community of traders now, of people learning, is there's other people that hop in there and ask the questions too. So I've really been happy with the community of the Crypto Coach students and how much they're really giving back the knowledge to each other for the veteran students as far as new people who's coming in. So since everybody, you're getting 24-hour access to me as a Crypto One trader. You know what I mean? Whenever I put out a trade for Crypto One, it could be 3 weeks, a month or so before that coin breaks out, and there's no communication between you and me, right? And so for the people who really want to be kind of working with me, kind of trading with me, know what's going on with the trades, the company, what coins we're looking at, for the future, right? So I don't really put out a buy alert if the coin is in the buy zone. But there might be a coin that we looked at on our, Crypto Coach Thursday market review. I'm like, hey guys, let's look at this coin for next week. I think it's going to pull back to here. Let's wait for that. So that's kind of the gist of the product. 24/7 consulting, personal questions, the market review week to week, so you know what's going on, whether things are good or bad. There's always a lot of education that can be learned during it. And the last one is ICOs. So that's the initial coin offering. It's kind of like an IPO, like a stock that hasn't gone public yet. It's a way to buy a coin that's super cheap and it's pre-exchanges phase before it goes on exchange and has a trade volume. So with all that, it is $10,500. And so, again, this is a monthly deal, right? And so it's still less than $1,000 a month. And, when you talk about the 52 hours of market reviews, all the other questions, you start to break it down by hourly. It's really, I think, very fair. And I want everyone to know that this price point is not finished yet. I'm probably going to have it at $10,500 for 60 days. And then it's going to go to $15,500. And then, over time, it's going to work its way up to $20,000, $25,000. So, now is definitely still time to be capitalizing on this price point. For y'all that have kind of followed, this thing was $5,500 for a couple months. It was a discounted price point through Kubera, as we talked about. It was always going to be $10,500, and now we're at that price point. So I just want everyone to know that these raises on the price they're hard dates, and I've been sticking to them for the fairness of the product and for the other students that are coming in. And so I just want to set that field that 60 days from May 1st, we're going to see this thing raised by $5,000. And so, that's almost a whole Bitcoin right now that you could save on this product. And so, if you're interested in this product, reach out to me or the person that first off, get with the person who brought you on the call, and then reach out to me, and we'll talk about how we can get started, payment options, and all that good stuff like that.
Perfect. Okay, Corey. So.
Oh, and I guess the last thing I want to say on that, Roger, is we do have a referral on this. It's going to be $2,000. So I've always done about 20%. So on like $10,500, you get $2,000 referral. If they pay in USD, you get it through PayPal. If they pay in Bitcoin, you get it immediately in Bitcoin. And it's outside of the volume. It's just kind of like a referral bonus, kind of like a credit bonus, but all up front for the person who referred. So I just want to get that in there.
That's okay. That's fine. Okay, so thanks for that, Corey. There was new stuff on there today, and there was a lot of interesting stuff on there. So, and it's good when we actually get new content to put across on these calls as well, because there is a lot to learn. It's a lot to cram into a short space of time. So, guys, Corey's going to be with us again in 2 weeks' time. These calls happen every second Tuesday. If you have anyone that is interested in this business, doesn't understand about crypto, this is the place where they're going to find out some basic stuff and some advanced stuff as well. So get as many people as you can on. Now, tomorrow night, we have a regular Zoom call. So for tomorrow night's call, we actually have the president of Kubera, Chad Garner, who's going to be our guest on our call tomorrow. Get as many people as you possibly can on the call. If you didn't listen to the company webinar yesterday, get hold of the recording. The recording's been posted absolutely everywhere. It was quite a short webinar by the standards of a lot of the company webinars, but there's a whole host of new products out that are extremely exciting, and it's going to be interesting to have Chad tell us tomorrow what that means to us. So get everybody you can on the call tomorrow. For the rest of you, for everyone else rather, in terms of business as usual, just keep on getting as many people as possible to these calls, and get as many people to listen to Corey as well. Next week we'll have another call with John Martinez. And he's going to talk about building your business as well. So there's an awful lot going about. For the moment, however, that's all finished for now. So thank you for your time, folks. My name is Roger Garth. We'll speak to you all soon. Bye, everybody.
Cheers, everybody.
She's taller than him.